about what they're doing, or about centrifuge, whatever it is, we will see. Then we have Derek. Derek has been a contributor for Aladdin DAO, but now is also a candidate, and he did always take the voter research note. And yeah, thank you for this. I guess it has been an important task for us to have research notes in a written form, and he is also a candidate now, and he will present a project which I don't know, but we will be surprised. And then we also, I don't know, I guess Mr. Mesa, yeah, is also here. Mr. Masa, I will give him room at the end, because he also wants to add something to his candidacy. And yeah. So about news, so we have like this, yeah, we did like the constrator thing, I guess you all know, but now we have 30 million of TVL. So we have been quite grown during the last week, and that's very nice. So looks like we have like some product market fit found here, and we added the 3 pool last week. So the 3 pool is like the standard pool on Curve, who has like USDT, DAI, and USD. I guess, yeah, this is like standard pool. We added this, and somebody aped in and gave us like 15 million TVL on the 3 pool. And yeah, I post some links on the chat. And we are now also on the DeFi Llama. So we are on the DeFi Llama page. You see TVL, how it grows. So yeah, this is the constrainer. So this is running fine. We have like, yeah, it's a nice product, and we also get some traction on Twitter and people using this. Then we have opened up the voting process for the intermediate presentation. So there's like a big vote on Snapshot where the Boule members can vote about which strategy they want to support. So if you vote yes, I post a link Snapshot, and there is in the snapshot itself, there's a link to a doc, to a Google Docs who describes the strategy. So yeah, vote for this, please. The vote is ongoing for quite some time, so you still have time, but this is interesting to see. And as said, you have to back it up with 10K ALD each yes vote. Then we will have a community voting proposal about the new Boule members, candidates who want to join, and we're preparing this at the moment, and then we will going to vote about this. So yeah, that's what the process we are now. And then we also have another vote on Snapshot for the candidates, for the contributors, for the Boule members who contributed most to the community building. So this is like the vote who is like always on, but we do vote regularly on this. So please, if you own ALD, please vote for the Boule member who contributes the most. And yeah, that's from the news side. So I guess we move over to Monique and the Younger. Maybe you can reshare your slides, last few slides, and then yeah, you can go from there. Maybe you can
just
repeat the last few, I don't know, centrifuge you presented us. And
yeah. Martin, do you want us to do another summary just for the people that weren't here last time? Or I mean, how much time do you want to allocate to us? Maybe that's easiest. Then we can pick what we think is useful.
Yeah, I think we can spend another like 15, 20 minutes on your side, and then we will have Derek for the rest, and then Mr. Massa 10 minutes at the end. So
okay.
Or maybe there are already questions. You know, somebody has questions from last time.
Yeah, absolutely.
I have
up
a question
to you. If there are questions already, then
yeah, I have a question to centrifuge. You know, normally it's just, yeah, but what's my question is, yeah, what what's the token representing? You know, if I buy this token, what do I own basically?
Yeah,
So
good question.
do I get like a dividend, or is it just a government's token? Or
For now, it's just a governance token, but there are very concrete plans to basically, I mean, you know, again, in our opinion, and also from the interviews, can you hear me properly, or Martin?
pardon?
Can you hear me?
Yeah.
Can you hear me well?
Yeah, it not so well, but it works.
Okay, I will try. Sorry about this. But Centrifuge provides a lot of utility to issuers, right? That want to securitize assets on Centrifuge, and to the buyers of these assets. And right now, Centrifuge, you know, is planning to charge for this service by charging a 30 basis points running fee on all issuances. For now, it's 0, but they'll switch that on in the next couple of months. And one of the ideas, for instance, is to have these costs, these fees to the platform paid in the CFG token, and thereby, and then, you know, burn, and that will create hopefully demand for the token as utility goes up, and then you know, there may, for instance, be a burning mechanism of the CFG token. So similar, I guess, to how other, you know, how some chains work, right? ETH, for instance, Ethereum, right? You need ETH if you want to use the Ethereum chain, Ethereum blockchain, and similar here. If you, in the future, if you want to use Centrifuge, you need CFG, because that's how you'll pay that's how you pay to use it, right? And as a holder of CFG, hopefully over time, you know, there will be less and less CFG, and that should, you know, increase the value of CFG over time. It's a governance and utility token in a sense, right? People that buy it, they can use it to use the platform. But again, that's in the future. Right now, it's strictly speaking only a governance token. But in the future, it will most likely have real utility, as I just described.
This is more a general question. So, you know, if you look at, you have this government's valueless government's token, you know, somehow, and it's a quote, you know, valueless government's token. There's like one part of the tokenomics, and mostly it's also done because then you don't have like these legal issues. So you make it like a government's token, then yeah, you switch it to maybe later. Now you switch it to a burn buyback, you know, how they're doing it right now, and so but I also see, you know, now don't you earn like CVF token if you use their product? Don't they distribute the token if you use their product? So you get like Centrifuge token if they use their product.
Yeah, correct. If you are, that's the case right now. So one of the ways in which they distribute tokens to the community is, you know, is to the actual users. So if you are a liquidity provider on Centrifuge, then you receive a CFG token. And if you are an originator, so, you know, the companies bringing the assets on chain, there are also rewards for you. These rewards have, you know, at the beginning, like 1 year ago, these rewards were pretty substantial, but have now, you know, they've been reduced to around maybe, I'm just trying to adjust it to the dollar price, but they have been reduced by, I guess, nearly 85% since the start. And today, the emissions are relatively small. But you're right, there are emissions, and they get distributed to the users of the platform.
And this is another question I have sometimes. What I think it's difficult, because then at the end, but all the projects do this. You pay your customers, so you pay the customers to be your customers. And
yeah.
I guess in the non-crypto world, this is also happening. That you like, you make your service cheaper than it really is to get people used. To get use at the end. How do you think about this? But I think sometimes, it's very difficult to find true product market fit, because as long as you pay people for using your products, they will use it. But if you stop paying, then maybe you don't have the real product market fit, because if you stop paying, then maybe they are no use anymore, because they we attract like the wrong users.
Yeah. And I think in the case of, it's a question we ask ourselves as well. In the case of Centrifuge, in the beginning, at the beginning, the APYs that we, for instance, were able to lock in after then the token launched were around 200 to 300% APY. So massive kind of like returns, and even until October last year, the returns on CFG token, which they were very short vesting period. I think it's like 30 days or something. Were
Now I lost you.
And so 50% APY. So yes, you attracted the wrong users. Maybe there are several examples now of Martin.
Yes, now you're back.
Martin, can you hear me?
Yeah, now yes, but yeah.
Okay, I will go outside because maybe it's. Sorry about that.
There was only 1 cent.
So you're right that in the beginning, it was all about attracting liquidity, and for sure they got the wrong users. But for instance, their biggest customer today, Centrifuge's bigger customer today is MakerDAO. MakerDAO provides them with a over $40 million credit line at the moment, and Maker doesn't receive any incentives. So I think that's a great example of a real customer that provides most of the liquidity today to Centrifuge, and it's by far the biggest customer, and they're not in it for the liquidity rewards. We know that because they're not receiving any. Mm-hmm. So and the same thing, by the way, on the issuer side, which I think is a pretty important part of the ecosystem. The liquidity rewards that they receive are fairly small. I mean, fairly insignificant in comparison to the overall size of these companies. But these companies, since they've plugged into Centrifuge, have grown a lot. They've managed to grow their portfolios quite a bit, and that also shows that their technology, to some extent, definitely works. And last thing, so again, APYs have gone from say 200 to 300% in the beginning to 50% in Q4 last year to now, between say 15 to 20%. So the APYs have gone down dramatically, but the TVL hasn't shrunk. It has actually only grown. But it's something we're monitoring very closely. It's something that the Centrifuge team, from what we know, is very aware of. They're trying to get the good kind of customers.
Yes. So maybe I open up the round if there are any questions about Centrifuge or the candidates.
Hey guys. Really appreciated the conversation on this. Do we know anything more about the unlock of tokens for the core team founders and any of the funds or angels investors behind it? And then if not, that would be something I'd love to just find out a bit more about. Just kind of make sure it looks normal to compared to other projects, and that there isn't some like massive unlock about to happen.
Yes. So the centrifuge team has published a kind of like a chart detailing that these unlocks. There, just high. We can definitely circulate it after the call, but I don't have it with me right now. But high level, these are fairly long dated unlocks, right? Where, if I remember correctly, there was a 12-month cliff, and then you had tokens were unlocked over a multi-year period. Was it 3 to 4 years around that time, right? It was slightly pre-ICO, which was in June, or which was in spring 2021. So there's nothing weird about it from what we saw. Yeah.
Oh, sorry. Just a easy follow-up to that. Do you know what the total token supply is for CFG?
It's slightly 425 million, I think, tokens.
Yes.
425 million. Cool. Okay, so right now it's around 50 cents. So this CFG sitting at a fully diluted valuation, pretty in line with like all the major DeFi tokens that have drawn down. I mean, I think at 200 million, it depends on like how bullish you are on the future of centrifuge, but there are definitely rounds that have been privately raised in the last year with live products that have been around that valuation. So it definitely makes it really interesting. So cool. Yeah, no, I appreciate it. I've been pretty ignorant to all the work that Centrifuge has done, other than I continue to like recognize the great work they've done because of the big names they've partnered with. So this has been really interesting. I really don't have a strong opinion either way on Centrifuge. I think my one hesitation is just the usual are there other projects with just clear upside, less friction to their own like growth than Centrifuge. One of the things though that I really like about Centrifuge is I feel like they're focused on really hard problems, and after a really frothy bull run, whether or not we're still in a bull run or not, but after a really frothy bull run, I anticipate that projects that have been here for a longer time and have demonstrated that they're clearly committed to solving really hard problems with like a foundational layer of supporters who have the patience, they're token holders that have the patience to wait on them solving these big problems. I'm bullish on those types of projects over the next few years. So yeah. And then I think like I'd love to hear others' feedback on like, how do you think about Centrifuge versus like some of the other competitors? And I probably would throw in like the likes of even the likes of like, I know they're not direct competitors, but like a Goldfinch or even Maple Finance, which I think have arguably like a simpler route to growing. How you think about those in comparison to Centrifuge? So, and by the way, guys, since you presented all this too, if you have more thoughts on that, love to hear them from you first. But that's really it.
Yeah, happy to hear from anybody's thoughts. I mean, we're also curious to what people think. In terms of Goldfinch versus Centrifuge versus Maple Finance. I mean, Maple Finance, I think there are a couple of things that are different. But let's maybe start with Maple Finance. They found their niche, from at least what I understand, in terms of bringing uncollateralized credit to the crypto ecosystem, right? Because they've realized there are businesses that may be in need of uncollateralized loans, such as the market makers and so on. And they've obviously grown tremendously, much faster than Centrifuge. They've but yeah. So that's that. So I think they are quite different in the sense that Centrifuge, what they try to do is they try to bring real world assets on chain. They try to, but it's not necessarily for crypto native investors or crypto native issuers. It's literally just rails to make securitization far cheaper and easier and accessible to anybody. So, in a year's time from now, what I would hope is that the biggest users of Centrifuge will not even know that they are on that there's a blockchain behind that, or that there's a crypto project behind that, but they just use it because it has great utility to them. So I think that's how they differentiate from Maple. In terms of Goldfinch, I think they are more similar. Goldfinch obviously has this focus on emerging markets, which Centrifuge doesn't have. I also think Centrifuge, if you look at, they've obviously been in the market for a longer time, and their technology and partnerships and business is overall, I think, much more advanced than what Goldfinch is doing from what I see. But they are, I guess, more in a similar camp. The other thing that is interesting is that both Goldfinch and Centrifuge are permissioned, so you need to do a KYC, I think, to onboard, which is super helpful, because I guess both of them are looking towards going down a path where institutional players come in to their platform. And one thing that we've heard is that institutional players are very, very keen on using dApps that where we know where the money comes from. We may or may not like KYC, but I think that's actually a very good move, I think, if you want to bring institutional capital in, which will ultimately be cheaper and will be bigger. And both of them are doing that. Yeah. So I think Maple is kind of apart. Goldfinch and Centrifuge have similar goals, but I think they're approaching it differently.
Yeah, I think that's a good comparison. I definitely would encourage everyone then to as we continue discussing Centrifuge, I would think about the what do I want to say, the time horizon in mind for those that are in Aladdin DAO. I think me personally, I am patient to work with projects like this when it comes to my own personal portfolio, because I'm very long, I always have a 5-10 year horizon, which is funny because it's not even that long compared to traditional finance. But in our space, obviously that feels like a long time. My one other concern would be whether Aladdin DAO token holders want to make a bet on a crossover DeFi to TradFi sort of project. So in other words, I personally find this to be really appealing, but I think about, again, the market we've lived through, and I don't know if Centrifuge has some major partnerships like Aave that can help it to bootstrap its own growth, then that's exciting. But I look at permissionless apps as having just unlimited upside over the coming years. I think that there's been a narrative of like, if we can sort of bridge that gap with traditional finance, that like all this institutional capital will roll in. I have no doubt it's all going to come. And in fact, quite a bit is already here. But I think it's, it's like a closed application competing with everything that's open. And there's just a lot of money that's become that much wealthier during the last few years. And so like that pie of those who are investing permissionlessly without KYC, I think is going to continue to eclipse the growth of the inflows of traditional finance capital into DeFi. So anyways, those are my thoughts here on I just like, if you said, do you think Centrifuge will grow from now to a year from now? Absolutely. Like, is it a solid, project from a fundamental standpoint? Absolutely. Does it have the growth potential that I think we saw in lots of early DeFi blue chip projects? And even now, like with the likes of I don't hold this token, but like Rari Capital just is like building so many new tools to appeal to the permissionless crowd of users, which is, to me, what is truly DeFi. So can a hybrid application like this, can a hybrid application compete or, help investors to realize the sort of upside that the truly permissionless apps do? I'm pretty bearish on that. So anyways, those are my thoughts in terms of whether or not we should be moving forward with Centrifuge.
Maybe define that just as a I don't necessarily disagree with you. I think they are very different profiles, but just two things that I think we find interesting here. Number one, in terms of growth, I think Centrifuge has focused a lot on the institutional adoption for the last couple of months, and has not at all has kind of like ignored more retail participation, because retail need very high spreads, right, in order to make this work. Whereas institutionals, there's clear utility for them to use platforms like this, and they can do it at spreads that are way tighter, APYs that are in the single digits. So I think what we'll see is the growth in terms of TBL at least will be extremely lumpy. I can totally imagine, some institutional coming along and saying, look, I'm going to give you 100 million in terms of, to invest in in the different pools there. Or, what they've pulled off with Maker at 44 million credit line. Maker has said they would like to increase the exposure to real world assets to 300 million over the next year or two. Most of that is going to go to Centrifuge. So, I think it will be just way lumpier, but I could totally imagine the TBL of Centrifuge going to a couple of 100 million or $500 million within the next year. And it's not going to grow, constantly. It's just they're going to be huge. There's going to be huge spikes. And then same on the issuer side. I mean, the issuers we've spoken to, they have, 100 million plus, each of them 100 million plus of opportunities in the pipeline. And again, that will be, pretty lumpy. And then the last thing is, question to you, don't you value a little bit the diversification that you get from this kind of project, because it's a different project, because there is, you have this crossover between TradFi and DeFi, as well as the permissioned aspect. Isn't that a good diversifier to say, if you have, I don't know, like a portfolio, and then, I don't know, a single digit percentage number of that is in stuff like this, that, in case DeFi, without KYC doesn't work anymore, then these projects would have a leg up. I'm just thinking in terms of, tail risk, like what if there's, big regulation coming in suddenly? Question more to you on that last one, or to the group.
Yeah, really great points. I agree with especially the point about it's a different sort of exposure than probably all the other projects that are being considered. In a way, it almost reminds me of like at Fourth Revolution Capital, like it is painful, obviously, when we meet great founders with great ideas, and just obviously for some reason we choose to not fund them because we have a thesis that there's other projects that might favorably play out for us versus theirs. This kind of reminds me of that. Like actually a good example is like if I meet a founder with a great project and they don't have a token planned, or they seem hesitant about it, there's like something that holds back that growth. But here we have that token obviously out, and so I think the token will be unintentionally, I think the token is always like a great marketing tool, just because by anyone holding that token, it puts skin in the game and creates a wider spread community that's working for you. So anyways, yeah, this is really cool. What is the in the end, if we deploy liquidity, Martin?
Pardon?
Oh, Martin, just quick question. If we deploy liquidity, how much is it anyways? Like how much of like Aladdin DAO liquidity would be put into?
Yeah, in a way, this is only showcase. I asked them to present a project which they like, and are near. So it's not by definition a project we will invest into it, basically. It's just much more like the round we did at the start of Aladdin DAO, where every candidate just presented a project of what they like. It's not so targeted for us, basically.
Yeah. Cool. All right. Well, I'll stop now. But yeah, thanks, guys.
I guess we need some time for Derek and then Mr. Massa. So thank you for these questions, Steve, I did too. And I guess these are different takes on investing. If you see regulation, this is, of course, they go the regulated way, and this is sometimes very it needs a lot of work, and you have to talk to regulators and all that stuff. But at the end, maybe if there is some regulation, you are faster and you can grow faster. Maybe this is the investment thesis on Centrifuge. So thank you for presenting this, and I guess we will switch to Derek and his project, because I want to give him at least 20 minutes, and then we can end with Mr. Massa. And thank you for joining Untitled Chapter, and we will vote about the candidates during the next week, I guess. So Derek, are you ready to present yourself? Or
yeah, I can share my screen. That works. So I'll be presenting a market neutral LP position on Uni. I guess for kind of a quick intro about me, I'm currently a student at Georgetown University, which is a school in DC, studying econ and math. Just kind of regarding my experience, pandemic made things a little weird. I actually went down to part-time and took kind of a pseudo gap year over, basically late 2020, early 2021. And I worked for a solar project finance firm, Altus Power, that actually recently just went public as an analyst. And then I also in TradFi worked for an income share agreement startup that's basically a kind of a new type of student lending product. And then I was also part of Georgetown's student-run hedge fund that has about $1 million in AUM as a VP in the tech sector. But I got into crypto after those experiences, just kind of growing really interested in the creativity associated with financial products. In late 2020, early 2021, right around DeFi summer, and immediately became really interested. And I actually, over the pandemic, like I said, went down to part-time as a student, ended up interning at Accolade Partners, which was a first mover in the blockchain fund-to-fund space. So they were LPs in funds like 1KX, Variant, Polychain, and some of the kind of early crypto native VCs. And then gradually just kind of became more and more convicted and got a little bit more involved in the on-chain world. Started at Index Coop as a BD contributor for a little, and then eventually reached out to Charlene and Martin at Aladdin and started drafting research reports and meeting minutes for most of the Boule meetings, just because I got really interested in the project, and kind of just regarding the background seemed like a great fit. And then more recently, I started at the investment team at Variant Fund, which is a first check token fund that was started in 2020 by Jesse Walden, who came out of A16Z Crypto, and then the two more recent GPs are Spencer Noon and Lee Jin. We invest in this thesis called the ownership economy that basically posits that the next generation of leading web platforms will be user-owned and governed. We were one of the earliest investors in DeFi protocols like Uni Swap, Fei, Grow, and a few others. So just kind of putting it out there that we are an investor in Uni. And then within the firm, most of my focus is in DeFi, and I've been helping a lot specifically with on-chain data analytics through SQL and Dune, along with token distribution help, just given my academic background. So moving on to the actual presentation. For kind of a quick overview of Uniswap, which I'm sure all of you are really familiar with, it's obviously the market-leading AMM-based DEX. They're currently tracking about 70 to 75% market share, just using most data from the block. Kind of going over two things I want to highlight. The first being the V3 upgrade that I'm sure most of you are pretty familiar with. It introduced this concept of concentrated liquidity, where instead of just kind of providing to a general pool, you now provide liquidity in ticks, which are basically specific price ranges where you have more control over the fees and kind of where exactly those tokens can trade. And then the other thing I just want to point out is most volume, as you can kind of see from the chart I put up that I just pulled from the block, is moving from V2 to V3. And then the other thing I really want to highlight about Uni is when you look at their volume per TVL, which is kind of a metric that would represent like potential trading fees that you could earn, it's multiples higher than most of the other leading dexes like Balancer, Bancor, Sushi, Curve. So it makes LPing, despite the fact that you're facing IL, unlike you might on something like Bancor, very profitable, just given how much more trading activity there is on the platform. And then kind of zooming in specifically on the ETH USDC pool, it sees basically the highest volume on the entire DEX, and trading fees right now are tracking at about 40% APY, which is a pretty decent return just for the general pool. And then I'll go into the strategy a little bit later, but it also involves a lending protocol, and I thought Alchemix would be really interesting. It's obviously part of the DeFi 2.0 wave, and the idea with Alchemix is that you'll deposit stables, and then more recently, they also introduced ETH as collateral for a loan, and then the protocol will deposit it in yearn to earn interest. So the idea is that the debt will gradually be repaid by the interest that accrues from that yield protocol over time. So you're not really facing liquidations like you would on your traditional lending platform. And then there are basically three general options to manage the loan. You can leave the deposit in and then periodically draw down on the collateral, repay the loan, and then withdraw the collateral, or lastly, liquidate the loan using the collateral and then keep the remainder. And then they allow you to lend at an LTV, or borrow, sorry, at an LTV of about 50%, but if you wanted to, you could also just loop some of the collateral, considering that it's stable. So you're not really taking on much liquidation risk, but from the fact that you're not really dealing with the massive price changes from the actual collateral, and then just the design of the platform like I described above. So the general strategy would basically be depositing USDC in Alchemix, and then that will return ALUSD, which is their stablecoin. And then you would take that, go to a Curve, swap that for USDC, and then either directly on Curve or on Uni, swap that USDC for ETH. So in other words, you have ETH exposure that you're borrowing using stables as a collateral, and then you would pair ETH and USDC, kind of bringing in, obviously not the collateral, but additional as an LP position on Uniswap. So this was an idea that was actually partially inspired by this newer project that's still in the testing phase, Scion, but it basically provides you exposure to the pool without direct exposure to ETH, considering the collateral is in stables. So the general rationale for the strategy is kind of like I just said, since the borrowed position and the collateral is based in stables, you're not directly exposed to the price risk of ETH like you would if you were just kind of directly LPing. And then secondly, the return profile is pretty strong, considering it's mostly based on stables. Like I said, that pool is tracking at about 40% APY. That would obviously be slightly lower, just given an LTV of about 50. But that's still like relatively profitable return for stables. You're not really at threat of liquidations, which is why I thought Alchemix could be an interesting lending protocol to use. But like I said, you could use this strategy with like a compounder Aave, and then just kind of broader tailwinds that I would like to point out regarding kind of volume gradually moving off to on-chain. when you look at the ratio of DEX volume to centralized exchange, right now it's really small, and it's kind of this huge disconnect in crypto that for a community that values decentralization and security, the vast majority of trading volume obviously happens on centralized exchanges. And then broadly, Uni Swap has maintained a pretty defensible position as a leading DEX and is going pretty aggressively multi-chain. I think this strategy could also be replicated, interestingly, on something like Polygon, where Uniswap just launched and is pretty aggressively taking market share if you wanted to bridge tokens up. And then the main risk that I would definitely point out is you're dealing with obvious platform risk. Alchemix is obviously a newer protocol, so that carries some, but any lending protocol you use is obviously going to carry some degree of platform risk. And then, as I mentioned before, like any Uni LP position, you're subject to IL, so definitely something to consider. But I would say just given how much trading activity there is with ETH USDC, should be somewhat minimal. And I mean, the strategy is broadly a bet that like over the medium term, ETH isn't going to see any like massive price swings in either direction, which I think just kind of based off of like the broader macro environment, no immediate catalysts, and the fact that things have gotten like somewhat quiet with the possibility that there's going to be some regulatory clarity is a somewhat reasonable claim. And then third, the APY is variable, just given the fact that it's based off of trading fees. So decreased volume could obviously hurt the return. And then lastly, it involves quite a few protocols just in terms of how you move the position. So there could be a decent amount of gas incurred. But yeah, I mean, love to open it up to questions now, either on the strategy, my background, and then I guess one thing I should probably bring up regarding why I'm running for the Boule. I mean, I've really enjoyed kind of getting more and more involved with Aladdin, kind of like I started out with. I've always been really interested just kind of in the creativity associated with crafting different financial products and strategies. There are kind of two things I would definitely point out regarding why I specifically wanted to apply now. The first being obviously young, still a student in college, but I think kind of when you're broadly looking at what it's going to take for DeFi, Web3, you know, crypto broadly, whatever you want to call it, to reach the mainstream, there has to be some sort of traction with the younger audience. So I think from a branding perspective, it could be an interesting move. And then secondly, I think it also just points out an interesting fact of the actual DAO that you can kind of, instead of sort of this top-down approach of bringing in Boule members, make it a little bit more bottoms up by having people kind of cultivate just sort of a general, you know, pulse and understanding of yield farming by kind of starting within the DAO and then kind of moving up, if that makes sense. But yeah, like I said, we'd love to open it up to any questions.
Why are you finishing college, Derek? you're doing such good work already. So yeah, great presentation, man. I don't have anything to add. I looked at your bio and was like, I don't understand. Did he mean to say was a student at Georgetown? It looks like he's already accomplished quite a bit. So pretty cool, man. I love it. When I was 22, I was like trying to figure out how to buy beer. So then you're
yeah, I've figured it out using
yeah. If for any reason I love Variant, and Spencer's just an awesome person. So you're in a great place, but if that doesn't work out, please come talk to me. So anyways, yeah, nothing to add. Great job, man.
Thank you. I appreciate it. Yeah, I mostly work under Spencer at Variant. He's a great guy. Something special.
Don't tell him I said he's a great guy. He knows. I don't want it to go to his head. No, yeah, the whole team. You guys have such a great team. So nice to meet you, Derek.
Yeah, great to meet you too. Thank you.
Cool. Yeah. Thank you for your presentation. I have just one question. You know, the one thing is difficult for V3 is like how you position your liquidity, you know, because you have to do it yourself. So my question is how you do position liquidity initially, you know.
It's a really good
certain range or
yeah, it's a really good question. You can provide it within a pretty wide tick, which is probably what I would recommend if you're just doing a little bit more of a general strategy, but I would definitely provide it to the other part of V3 is you can obviously select what fee tier you want to use. There's, I want to say it's like, I forget what the smallest one is, but the largest one is 0.3%, and then the second largest is 0.05, which the pool I showed was based off of the 0.05% tier, which I would probably recommend just given it sees by far the most volume, and it actually, in terms of like fees per TVL, tracks relatively similar to the 0.31, just given how many more people use it.
Yeah, I'm not providing liquidity for V3 because I think it's for pros, basically. But
Yeah, it's a
there are
little complicated.
projects out there, there are projects out there who try to manage liquidity for you, basically.
Yeah.
But I don't know them well, there's like Uni is it called, this gelato framework. I don't know how they do it somehow.
Yeah, it's interesting. You are seeing this kind of whole new generation of projects that are, building this like basically abstraction or optimization layer on top of V3 just to provide more streamlined LP positions. So yeah, I mean, it is somewhat complicated. It was took a little bit of reading for me to get comfortable with how it worked, but yeah, I mean, it's interesting. And I think the main reason for moving to concentrated liquidity was that the main word term that they used was this idea of greater capital efficiency, because your trading fees aren't really based off of your percentage of the pool, but theoretically providing capital to that specific tick, you would basically see the position that you would have in your standard XY equals K AMM, and then you would get fees based off of that percent, not like the total token, not the total tokens in the pool.
I have one question, I guess everyone is wondering what Uni as a company is doing right now, because now they have this product out and they have a huge team. So
yeah,
do you have any insights or idea what they are cooking in the background? I didn't do any research, but it should be visible somehow. It's visible somehow. I don't know. It's not visible, but I guess if you dig, then you will find out what maybe.
Yeah. Unfortunately, not too much that I think I can share, but yeah, I mean, they're definitely working a little bit. I think their focus is definitely primarily on their DEX product. And I think just when you look at, this is relatively public facing at like forum proposals and what's going on just broadly on their snapshot. They're pretty aggressively going multi-chain on EVMs. So I think, I wouldn't be surprised if they launched sometime on Avalanche. And then, like I said before, I find the Polygon story really interesting because QuickSwap was the dominant DEX on Polygon before Uni showed up, which was actually a fork of Uni V2. And then Uni just started basically really aggressively stealing market share from them. I think a lot of it is partially just due to the fact that Polygon comes off very much this ecosystem that's like overflow from mainnet. They don't really have like native dApps kind of similar to you see on like a Phantom, Avalanche, or some of the other EVMs. But yeah, it's an interesting project to track for sure.
Okay, thanks. Yeah, thank you very much for coming and presenting the strategy and yourself. And we will use the last few minutes to give Mr. Masa again the stage because he has another input. And
thank you, everyone. Appreciate it.
Thank you. Thanks. Hi, Mr. Masa. I guess you're muted. Maybe you're muted. I don't hear you. I can't hear you. But now it's strange. You agree somehow.
What about now? Can you hear me?
Now it's good. Yeah. Now you
okay, got it.
Thanks.
Looks like a little mic issue on my MacBook. So thank you very much again. So I just got 10 minutes to explain about another strategy about my early stage, also growth stage investment on my portfolio, because last time I'm going to share about my kind of new DeFi strategy on the bear trend right now, but my strength is actually more like early and growth stage investment. So for this time, I like to share my kind of tractions in the past for my early stage growth investment stuff in the crypto market. So let's start briefly. Let me explain about this one briefly. So this is a basic formula for the early stage growth stage investment. So the vertical one is market cap, and then horizontal one is business growth. Then of course in later stage investment is low risk and low return, and early stage investment and high risk and high return. Then basically the definition of early stage is focused on the seed to Series A round. and the growth stage is focused on the later than the Series B round. So that's the basic definitions. Then on my past, crypto study experiences, I pick up the two case study to tell you guys about my, the past fractions. The first one is HNT, Helium Network. Then my investment return as of March 2022, Helium Network is, I bought this token on my first time is October 2020. Then I continuously investment in this project, and in total, that my average, purchase price for this token is $2.0 per share, per tokens. Then I bought this one in Binance. The current price is $22, March 2022. So current total return is 11x. Then I don't sell any Helium token at this moment yet. Still holding. Then briefly explain about this project potential. The simplicity is actually, think about the tokenized wireless network. Then if you are familiar with this, this kind of like network business stuff, it's actually first project. It's going to be launched around 20 years ago. So is actually Phone Wireless. Then a lot of influential investment into this project, starting from Google Ventures, but finally didn't work well. But simply says fail. Then why they're gonna fail? One of the reasons actually, those user they're gonna buy, Wi-Fi router made by phone. We're gonna share those Wi-Fi network for free. Then it's based on royalty economy, so incentives. Then now it's good time we think about more scale up this wireless network ecosystem, because we can bring the token economy here. That's why I see the huge potential for the Helium network. Then here's additional market trend, which are also pretty good, positive effects for the Helium network business. First one is this one, 4G to 5G, because wireless environment, kind of evolution happening here right now because of this 5G. Because 4G is much more centralized network, infrastructure model, but the 5G is much more distributed model. That is why 5G network all the time have to build much more like a small antenna network model to scale up the network infrastructure. That is why it's pretty great fit for the Helium network business too. Then additionally, as we know, like IoT network, IoT market itself is rapidly growing these days. So it's gonna reach 1,567 billions in 2025. So it's huge market growth happening here in this IoT device market. Then what about the P2P, those kind of network business in this IoT market growth here is also rapidly growing. In the US, also these green right here is a market growth of P2P CDN, and a Helium network business is related to this category here, so rapidly growing. So it's great business opportunity here. Then once we're gonna move to team, there's also a pretty great team here, and then especially what I pay attention to these two members here. Sean Fanning, then also the Ned Taylor. Then Sean Fanning is actually the founder of the Napster. So he's kind of origin of the P2P file sharing network, which is actually related to the blockchain technology. So for him, it's actually kind of connecting that project. And then Sean Fanning is also the kind of pretty famous and capable programmer in the Silicon Valley. So he's kind of influencer, Silicon Valley startup engineering ecosystem. Then Ned Taylor. Also, what I pay attention to is actually here, he used to be a VP of BD for the OEM partnership movement at the Hopper. It's kind of hardware business stuff. Then why I pay attention to this Ned Taylor? Because of their platform strategy. So the Helium Spot, just like an Android business model. So they also release their own Wi-Fi device, Wi-Fi routing device, but at the same time, they're gonna take the open source approach to build partnership with the third-party manufacturer. Then currently 30 third-party manufacturer is live right now. Then because of this, kind of Android model here, their number of the node is actually biggest right now on an entire blockchain network. So it's actually bigger than Ethereum Beacon chain node number, over 64K, or 640K. So it's pretty big. Then also their token economy is applied to the limited supply model, which is actually much faster than Bitcoin inflation ratio here. So I think they also apply the differential asset model in the near future, following up the EIP 159 trend. Then ultimate goal for the Helium network is actually some POS mining. Ultimate goal for the Helium network will be this one, POS mining machine network. It's going to be a kind of disruptive technology on the blockchain industry because, once, everyone can build their own, mining machine inside their house by using Helium network device, then we can run, Ethereum mining or like 5-point sharing storage solutions or Helium network and those kind of Wi-Fi solutions too, because these, technology erosion happening here related to these Wi-Fi loaded devices market. So not only about, switching from proof of work to proof of stake, which is costs much more less computing power, lower electricity cost, but also like, once look at the flash memory market here, like, the flash memory, storage size itself is rapidly, evolving right now. So 2 terabytes for this single US memory. It's great innovations. Then most of the people are actually worried about, this Wi-Fi communication range. It's actually, this is also, evolving right now because, look this, news from the global news wire here. So the Gig Sky is actually kind of a, mobile communication network player also starting to use Helium network blockchain, Wi-Fi infrastructure. So, those users who are gonna use just, the smartphone chips inside here, the SIM card here on the iPhone, the Gig Sky one, then you can access the Helium network, P2P Wi-Fi network. So that's why I see a pretty big potential for this project. They already got the 22x return for this project. The second use case study is this one, DeFries DVT. Then still it's pretty early stage project. So I investment in, this is actually my first angel investment case. So I'm investment in this project, September 2021. It's pre-series A round. Then currently their token share price is, per share price is $1.5 or so. So I cannot open my, the exact purchase share for this pre-series round, but I got around like 3x at this moment. Then why I see this, game project, DeFries, first of all, is this one. So I focus on the 5 major key category on the metaverse: game, social, shopping, finance, work. Then of course, game will take the major part of this in the blockchain metaverse. Then once you look at, current, kind of a market stage of the NFT game, it's moving from the third generations. So the first generation is, as we know, like, CryptoKitties. Then next one is Axie Infinity. Then third generation, it's kind of DeFries or other player, Guild of Guardians too. Then those players target on much bigger DAU compared with past player such as CryptoKitties less than 1,000 or Axie Infinity more than 300K. So they target on, so DeFries target on 3 to 5 million DAU size. So it's pretty big number here. Then especially what they're focused on to build the kind of platform player as NFT game is actually this one, like Oasis on a blockchain metaverse. Then as we know, most of the generation X and Z, those player, most like OpenSea founder, they are so really wants to build like Oasis on the blockchain metaverse. Then they are looking for like the next Oasis project in blockchain space. Then I do think that DeFries will be the one-on-one. DeFries will be the one of those players here because I currently focus on 2 major categories into blockchain gaming space. So MMORPG or MMO sandbox. Then DeFries category here, MMORPG. Then why I think that MMORPG has pretty big potential to realize Oasis on the blockchain, metaverse here because of this one here. So this is a kind of good, reference for us to understand about, potential of the MMORPG game, blockchain space. So these are the most, largest, DAU mobile game on existing, like smartphone market, like iOS and Android. So Subway Surfer, Candy Crush Saga, and Clash of Clans. Then, so DAU size is pretty big, 28 million, 21 million, and 17 millions. Then think about like, of course, the key competency for the blockchain game is of course an NFT, because that's one of the key differentiation point compete with traditional game, right? Then think about those kind of business opportunity or good fit for the NFT game. I think Clash of Clans is the best match for this. Then why I do think so is that kind of simple. It's this one. So think about the success of the NFT game. Axie Infinity is actually a good example because we can see the variety of the NFT item inside the game. So not only about the character, but also the monster, weapons, land, firm. So multiple NFT trading opportunity out there inside the game. That is why along with the growth of the DAU growth, at the same time trading volume of the NFT also each value of the NFT is also sustainably going up. That is why that's also finally they can realize that huge business success as NFT game. Then also their team member is pretty capable member too. So Shane is my one of my good friends here, and he's also grad from UC Berkeley and a pretty good computer scientist. Also game freak. He's also a real game freak. So he's also pretty visionary tech entrepreneur in the blockchain space. So I really like him too. Then at the same time, also there are lots of great members here, but especially what I pay attention to is this guy, Chong Tao, because he is an ex-CTO at the Yotsu, and the Yotsu is actually one of the major game studio in Asia. Then why I do think like that way? Because currently in a third generation NFT game, what they are trying to build the game platform to generate and scaling up the vertical NFT game. So the good reference is running run by Axie Infinity, Sky Mavis. So the DeFi also targeted to build these kind of ecosystem in long term. Then think about their execution capability. I can sense that they can build this kind of ecosystem here. Then there are maybe two a good example for this potential here. The first one is this one. So they bring the completely new type of the gamifications inside the DeFi. So this is a good example. So Tiger is a pretty well-known American rapper in the US. Then Tiger also joined as a monster inside the DeFi game. So which means that once they made a pretty good tractions with this set of monster here, we can expect other celebrity also join DeFi as a monster. Then those kind of NFT question competition stuff, it's pretty unique and exciting one. It's like a Lady Gaga or like that kind of things. So I think this is a pretty unique idea for NFT game as a new generation here. So that's also a great execution capability about DeFi. The other example is D-Meter Pass ID. So D-Meter Pass ID get the inspiration from the Root project. Then Root project bring the eatable NFT model inside game studio model. Then DeFi get the inspiration from the D-Meter Pass, and then they leverage this idea. It's much more scalable one because each user wants to get this ID, they can edit their own NFT, but you don't have to program it. You don't have to code for this. By using graphic GUI model here, they're easy to edit these each NFT stuff. So that is why you can build much more. You can build the premium NFT much easier way compared with the root model here. That's why I see the pretty big potential for the DeFi too. So that's kind of my major case study about my early stage growth stage investment. Then of course I know that most of the stakeholder inside the DAO is much more focused on DeFi, but in long term I do think that to realize the decentralized blockchain Hasway, those kind of like the Boule member capability to focus on early stage growth stage investment stuff also play the critical role here. So yeah, for reference, I just share my investment strategy and tractions at this moment. Thank you.
Yeah, cool. That's very nice. Yeah, I don't know both of them, but it's it's a glimpse in another world, basically for myself. It's very interesting, and also I think the process how you it's very helpful that we on your slide it's very visible how your process works to look at these projects basically, because it's in a way it's very transparent. I guess you're just reading and then you're making the slides like on the go basically, and that's cool. I think it's very helpful to share for people who don't know how to analyze these projects basically. So yeah, we are over the time. I have questions, but maybe I have one that yeah, today I did think, you know, what's the narrative for the next cycle, basically, because now I guess we finished this cycle with yeah, NFT, of course, have been part of this cycle, but somehow I guess games and NFT, I guess they're the match made in heaven, basically. But somehow I feel the games who are not right now there, they are not, quality is not good enough, basically. So yeah, but I didn't get the last project. Is it more? So it's more a platform to make games. They don't make their own games. They make a framework for others to use, or is the game themselves?
Actually, you know, they are building their own game. So just like,
Okay.
you know, Sky Mavis. So Sky Mavis built, you know, Axie Infinity with their first success. Then later they're gonna build, you know, running platform.
Okay.
So
Okay.
I think, you know, Deep Horizon also follow up, you know, follow up the same path, just like, you know,
Okay.
Sky Mavis. Yeah.
Okay. Okay. Because I guess, you know, in the next rush, I just did have a conversation today, and it was about that, you know, that we see that many crypto games are just browser games somehow, because they are connected to the blockchain, and then they end up as browser games, but somehow the normal game users expect like a better graphic, and they can't be done in on a browser only. So the question is, you know, who is able to provide like a framework for these big studios to use NFTs in their games, because I assume they don't have the expertise to do it. They don't want to make it themselves, so they look for partners who are able to provide this for them. And I guess this, I don't know if there are any projects out there working on this, but we will see.
Yeah.
Yeah. So yeah, I finished this up, but I guess all the candidates we did see on these two meetings, I guess all of them are very qualified to be Boule members, and yeah, we will see. Yeah, how the outcome, but I guess chances are a little bit are high that everyone will end up as a Boule members, and I guess everyone is like very well qualified for adding value in these research cores and for the Boule as a whole. And yeah, thank you for your work, you know, Mr. Massad, and everyone who joined today and did present every candidate who came to us. And if you want to be a candidate, I guess there will be other rounds. We will add new candidates. We don't know the time frame on this, but I guess later down the road we'll add new candidates. So yeah, I guess as we see, two of the candidates now, they sticked around with us, not from the beginning, but Mr. Maza, yeah, from the beginning, and Derek joined like in half of the first season. He joined us, and so if you are interested in joining us, so yeah, you have to stick around somehow and yeah, come forward and ask us. So thanks. I finished the call. You're like over the hour, much over the hour, but thank you. So see you next week.
Thank you.
Yeah, thanks. Ciao. Tschüss.
Okay, thank you. Thank you, everybody.
Thank you, guys. Bye.
Thank you, guys. Bye.
Ciao.